Financial information should be prepared in such a way that it meets the ultimate goal of accounting, which is to provide information to the users for decision making. In this video, we'll discuss different types of stakeholders or users of financial information and why they need such information. Hello and welcome to the Accounting Feed. My name is Philan and I'm your host for this session. There are three categories of users of financial information. Number one, internal users. These are persons who are involved with the management and the day-to-day activities of the entity. These include management and staff who depend on this information to make decisions relating to future courses of action. Number two, external users. These are users who either have an interest in the organization's activities or could be affected by the activities of the organization in some way. These include general public, financial analysts, government, etc. Number three, connected users. These are users who have economic or contractual relationship with the organization. They include lenders, customers, suppliers, shareholders, etc. The interests of these stakeholders are discussed as follows. Number one, investors and potential investors. These are interested in their return and the security of their investment. By looking at the current financial statements, such as statement of profit or loss, they are able to predict the future prospects of an entity. As such, they can establish whether the return in form of dividends is commensurate to their investment. Potential investors will use the same to make decisions relating to whether or not they should put their money into the business. In terms of security of investment, by looking at the entity's statement of financial position, they will be able to check the entity's financial strength and solvency, which is an indicator that the entity has the ability to meet its financial obligation and hence there is no threat to their investment due to going concern issues. Number two, employees and trade union representatives. These parties need to know if the entity will continue to operate for the foreseeable future for the security of their employment. Trade unionists would like to know if the employers offer pay that is adequate for the position, qualifications, skills, expertise, and workload. Number three, lenders. These users require financial information to determine if the entity is able to meet their financial obligations as and when they fall due. By looking at the statement of financial position, they will be able to determine whether the entity's gearing is reasonable, hence the entity is strong enough to meet its obligations or even has the capacity for additional debt financing due to the availability of assets to back the borrowing as collaterals. Number four, government agencies and regulators. These users are interested in the entity's operations as they need to know how the economy is performing in order to plan financial and industrial policies. The regulators are also interested to know whether or not the entity is operating within applicable regulations. The tax authorities also use financial statements as the basis for assessing whether the entity is paying the right amount of tax. Number five, suppliers. These users require financial information to determine if the entity is able to meet their short-term financial obligations relating to the goods they sold on credit. They also want to know if the entity is in a good financial position to continue relating to it as customers. As for new suppliers, their interest may be informed by the need to get assurance about the financial health of the business before agreeing to supply goods on credit. Number six, customers. These users are interested in the company's operations in order to determine whether the entity will continue providing services they need in future, especially if the entity provides highly specialized supplies. Number seven, the general public. These parties may wish to assess the effect of the company on the economy, local environment, and local community. Companies are expected to contribute to their local economy and community in areas such as provisions of employment opportunities and business for local suppliers. In some countries, corporate social responsibility is ingrained in the law, but in most, it is a voluntary activity. Whichever the case may be, corporate social responsibility is seen as an important aspect of the entity as it gains reputation which translates to future sales due to goodwill attached to the entity. Some companies engage in corporate social responsibility schemes which they support environment, economy, and the community by, for instance, cleaning up the environment, supporting recycling schemes, providing scholarship for education, etc. This marks the end of our session today. Thanks for watching. If you are interested in accounting and finance topics, please ensure that you subscribe to this channel, The Accounting Feed. And if you have any questions on this topic or any other topic that relates to accounting, please do not forget to post it down below in the comments. Feel free to share this video and this channel to anyone you know might be interested in this type of content. Don't be stingy. Hello. And until the next one, cheers!